Welcome to Beyond the Valley, a CNBC tech podcast with Arjun Kharpal and Tom Chitty.
Beyond the Valley.
The stablecoin market is now worth over $200 billion. Stablecoins, which are a type of digital asset that track currencies like the US dollar, are backed by real-world assets. They were once the tool for trading in and out of different cryptocurrencies, but now stablecoins are taking on new use cases. And those issuing them are thinking about a world where assets become increasingly digital. Jeremy Allaire, CEO of Circle, the issuer of USDC, joins me for this special edition of Beyond the Valley from the World Economic Forum's meeting in Davos, Switzerland.
Beyond the Valley.
Jeremy, thanks for joining me on Beyond the Valley.
Thank you. It's awesome.
So let's just kick off. You launched USDC, I think, in 2018. What was going through your head at that point and the years leading up to this about the importance of stable coins, which now represent billions of dollars in value?
Yeah, absolutely. When I founded Circle 12 years ago, the basic idea was we could take fiat and we could turn it into digital currency, and we could run it over open, permissionless, public blockchain infrastructure. And that would ultimately lead to a world where sort of the cost of storing and moving value would effectively become free. You'd have this huge surge in the velocity of money. And the breakthrough of smart contracts, which back in 2013 didn't really exist, but people were talking about, would unleash a wave of money utility that we've never seen through programmable money. So that was the founding vision of the company. It took us about 5 years from a regulatory perspective, from a technology perspective, and from a market readiness perspective, to actually build what, before they were called stablecoins, we called fiat tokens. Super catchy. That vision really informed the development of USDC and the launch of USDC in 2018. And I think, over the last 6+ years, it's been pretty extraordinary. As you noted in your introduction, when we started out, you had to kind of find, where do you find product market fit? And we really found that in two areas. One was in these digital asset markets. These are what's interesting about digital asset markets is they're 24/7, 365, continuously settled. That's totally like any other part of the financial system. And so you need dollars that can do that too. And so that was very clearly a strong fit. But the other was actually in this area of programmable money. We aligned ourselves with all of these crypto startups building what's often called DeFi, so protocols on the internet that use the programmability to achieve new things. We knew in 2018 that the road to this becoming like an at-scale infrastructure that was used very, very widely was still going to take some time. And as every employee of Circle knows, we said it would take about 10 years to get to the point where we could achieve the initial vision. And we're basically there now. And it's really exciting because I think pretty much everyone acknowledges that stablecoins are going to be the money layer of the internet. And there's this tremendous energy coming from every part of the financial sector, corporates, others to get into this.
And Jeremy, you talk about this and you call it the internet financial system, and you've spoken a bit about this, built entirely on-chain, you say. Can you just lay out briefly kind of what your vision is here, and especially the part about being on-chain?
Yeah, I think, blockchain networks are general purpose, decentralized kind of operating systems. So that's the first thing to think about. And they give us some new capabilities, censorship resistant, immutable data, the ability to transact directly with any counterparty in the world around that data without some centralized intermediary, and they give us compute engines. You can write contracts, you can write code that interacts with that. So these are really powerful general purpose operating systems, and there's an intense competition for those right now. But that basically creates this base layer of the on-chain world. So on-chain is really there's a new layer of the internet. It's a new distributed operating system layer. That's the on-chain world. On-chain can be game items, on-chain can be your identity, on-chain can be money. So we're now in this world of bringing more and more things on-chain, intellectual property, et cetera. But I think when I talk about the internet financial system, it's sort of saying, what are the building blocks of the economic system? Corporate form, the organization of ownership, the intermediation of contracts, governance, voting. Those are building blocks that eventually will come on chain. And the modern corporation will be reinvented on chain. In the more near term, though, the opportunity is to take the building blocks of money, for example, cash or T-bills, or sort of what we think of as like this base layer of money, tokenize that, bring that on chain. So we've already done tokenized cash. We think there's going to be a lot of other important tokenized assets. And then you kind of go from there and you say, okay, well, what can you do with those things? Can you borrow them and lend them? Can you transfer them? Can you put a contract in front of it that time locks it? Can you build swaps between these different stablecoins, between different currencies? Can you build things like options, derivatives, exchanges, all on chain? So we can take the financial primitives of the financial system, bring those on chain, and then that becomes a kind of infrastructure that you can start to build modern, a sort of a true internet financial system around. But ultimately, at the edges of that are entities, households, corporations that will increasingly also be brought on chain and intermediated by smart contracts and AI.
Fascinating. And so you mentioned there the sort of tokenization of assets that are happening. And it feels a topic that has been spoken about a lot for the past few years. The hope that, things like stocks or bonds can be put on chain and tokenized, property, intellectual property, various different things. Where would you say we are on the journey there at this point in time?
So right now, the biggest tokenized asset is dollars. And as you noted, there's over 200 billion. USDC is the fastest growing digital dollar right now. We've outpaced all the major players in the last year, and that's accelerating. So cash is being tokenized, and there's regulatory substance around that around the world as well, which we can come back to. But in the last year and a half, you've sort of seen this concept of real-world assets, tokenization of real-world assets. The biggest category there is sort of these tokenized money market funds, tokenized treasury bills. That's about $3 billion, just to put it in perspective. And so when you think about the total addressable market for legal electronic money in the world, across every government, every currency, it's about $130 trillion. So there's a long way to go, just with cash and kind of base layer, kind of the short duration government bonds, things like that. So there's a lot of headroom there. But I think that's going to grow a lot. We think that's going to be quite large. And then, can you have bonds, equity, all of these things? Eventually, yes. And this gets back to the regulatory question. 6 months ago, if you walked into the SEC and said, I want to issue a tokenized bond or this, that, or the other, you'd get blank stares or worse. And so I think now there's a real openness to all of this. And I think you're going to see, not just in the United States, I mean, we actually have rules in Europe now for issuing digital tokens. And you're seeing, tokenized bonds, actually more and more projects like that. So I think we'll see over the next 24 months quite a bit of growth in that. But I also expect tokenized cash, aka stablecoins, to really continue the tremendous growth that they've had.
We'll definitely dig into the regulatory question because it's obviously a big one, top of mind for your industry. But where in this vision of yours does Circle fit in? We know the issue of USDC, that is very key part of some of these transactions. But you're trying to be more than that, a platform, right?
Yeah.
So what's Circle's role in all of this?
Yeah, so I think if you look at Circle today, we issue the largest regulated digital dollar, USDC. We also issued the largest regulated digital euro, EURC. Much smaller, but only became possible in the last, 7 months. And then, in addition to issuing those, which is sort of financial market infrastructure regulated by prudential regulators, increasingly all around the world, and all the plumbing and reserve banking and assurance and other things that goes around it. That's one big piece of what we do. But we kind of face the market as a platform that anyone can build on. So there's the other part of what Circle does, which is we publish all of these smart contract protocols on the public internet. And so there's essentially an open, freely available dollar API to anyone in the world. If I'm a person, I want to connect my wallet to it, I can be on that digital dollar network without permission. If I'm a developer and I have an idea, whether it's a small business, a startup, a large enterprise, and I want to integrate digital dollar storage, transactions, I can just go integrate to that public API and do that. So what's amazing is what we've really managed to build is, the largest and most widely used, compliant stablecoin network in the world. And it's a network because you have today over 500 million people have wallets that can connect to and use USDC. We think that will grow into the billions in the coming years. So you have all that on the network. Just last week, Nubank, one of the most innovative fintech banks in the world, turned on USDC for almost 100 million users. It's a huge thing. We have tremendous partners with wallets like Binance that has 250 million users, for example. Coinbase has like 130 million users. So that's one part. But then underneath that is exchanges, custodians, trading firms, payment service providers, neobanks. Sort of every part of this ecosystem have integrated on this. And that creates these really powerful kind of network flywheels that grow usage for everyone.
And what does that mean for Circle's business model then? What does that look like to you in the future? Where are your main revenue sources, for example?
So today, we generate revenue from the nearly $50 billion of reserves that we hold. We have distribution partnerships with major companies in the industry and increasingly major mainstream consumer-facing companies, business and enterprise-facing companies. So we have distribution relationships. We have that help drive that and grow that. And we have a number of new products that are really providing higher level infrastructure for enterprises and developers that want to build applications that run on blockchain networks. And those are kind of like infrastructure as a service, more like AWS. So they're infrastructure where there's transactional costs to use that infrastructure. And so those are now getting adopted by a wide array of companies. So that's another really key piece. But I think when you think about where we are today in terms of market maturity, the numbers look big, but they're actually quite small. We do around $1 trillion a month of transaction volume on chain with USDC across the world. But we think that as this becomes more widely available, that can be eventually in the tens of trillions of dollars, and that as money velocity picks up, more and more use cases for money will grow, and those will create really interesting opportunities, not just for Circle to build products that make new revenue, but for the whole ecosystem of companies as well.
Let's tackle some of the regulatory questions then, Jeremy. There's been a change of administration in the US. We're recording this podcast the day after the inauguration of Donald Trump as president. He campaigned on a very pro-crypto message, an innovation message as well. What do you think your industry looks like in the US now under a new administration?
Yeah, I mean, the first thing I would say is I've been going to Capitol Hill for almost 13 years. I testified to the Senate in the first major Senate hearings in November of 2013. And we've walked in through the front door with every major government in the world. And that's critical because educating around this technology, its innovation potential, how to manage the risks that are associated with it is really critical. And if we don't have that collaboration with governments, this is never going to be something that everyone in the world will use. So that's been core to who we are as a company and taking that regulatory first path. Now, specifically to answer your question, there's no doubt that we have the first major global political and economic region in the United States where you have the first real crypto president, where the promotion of this as a strategic technology, as a strategic economic source of economic value, as a way to enhance and amplify the role of the dollar, as a way to drive innovation in capital markets, to drive more entrepreneurship. You have a presidency, and frankly, across Congress and other branches of government, you have leaders who really want to figure this out and want to put in place regulation, more regulation than we have today, which is absolutely appropriate, but also want to encourage this to be the center for the United States. We're here in Davos, obviously not the United States, but encourage the United States to be the center of innovation in this space. And there are American champion companies in this industry, companies like Circle, companies like Coinbase, and many others, blockchain platforms like Solana. So the United States is already leading, but I think under this new administration, we'll see very likely rapid progress in rulemaking and policymaking to advance this industry.
And the stablecoins in particular, there was a bill making its way through the legislative process around stablecoins. Do you expect there to be regulation this year around stablecoins specifically?
I do. I think this is something that has, not only is it a priority, I think, for the new leadership in Congress, but it was already a bipartisan priority. I think we were very close to the finish line. And I think that's going to get picked up pretty swiftly. And it's sort of foundational, right? If you have a definition of legal digital dollars that are properly regulated under a framework that the Federal Reserve and major regulators have a construct in, and then essentially corporations, financial institutions, households can then depend on this as a core form of money. It's a huge building block for so many of the other things that people want to do in this ecosystem. And so it's sort of a natural place to start.
And so I suspect your next few months are going to be busy meeting the new people in the administration and figuring out what that path looks like.
Yeah, I mean, I think absolutely Circle will invest time to, in Washington to ensure that the issues are well understood. And, I think, I don't want to get into the technicalities of stablecoin legislation, but actually I think it's pretty far along. And so I feel very good about that. And obviously there's a lot more to kind of crypto from a policy perspective than just stablecoins. So there's a lot of work that needs to be done in securities, markets, and a lot of other areas.
Jeremy, can I also get your take, I guess, on one of the more interesting proposals from the now president, which was a Bitcoin reserve? Is this, in your view, a good idea? Is it more just intention about saying, hey, we're supporting this industry?
Look, I think there's some very interesting questions, and part of what brought me into this industry 13 years ago was my own political and economic philosophy and beliefs, which were rooted in kind of Austrian economic thought, which is that full reserve money, sound money principles were good for economic discipline, for fiscal discipline. If we look back, when we decoupled from non-sovereign commodity money, we really saw around the world incredible abuses through fiat, and that goes on. The vast majority of governments in the world are significantly in debt. It's taken kind of open heart surgery, shock therapy in a place like Argentina to get out of this vicious cycle. And I respect that this is an important topic in the U.S. government now. And so my own belief is that over the very long term, could be 10 years, could be 20 years, could be 30 years, that the role of non-sovereign digital commodity money is going to continue to grow. It's going to be a bigger and bigger thing. I think the monetary base that is stored in that is going to be dramatically larger than it is today. And I think there's a question of at what point does that then become a question of sort of major economies anchoring in some of that digital commodity money. You've seen that in some small examples. The discussion in the United States is a much bigger one. But I believe that my own belief is that it would be prudent for central banks to hold some reserves in something like Bitcoin, and that the role of that as a ultimately, eventually, a backing mechanism for government-issued money over the long term, not the short term. And so that's what I believe. And so, I think these are changes that take decades. And so we'll watch that closely.
Yeah. Jeremy, you and leaders of other firms in digital assets have spent your time making sure you are positioned as the adults in the room when it comes to these conversations. When the president and the first lady launch meme coins, does that annoy you and others in the industry? Because you are trying to show this is very serious. There are big economic benefits here, and then you get something like the Melania coin.
Yeah, I mean, I don't know a lot about that operation or any of that, or the actual involvement of actual people holding office. So it's hard for me to comment specifically. I think there are lots of categories of digital tokens. We have like highly regulated digital tokens like USDC. You have highly unregulated tokens like memes, NFTs, and game objects, lots of things. So there's going to be a lot of that. I think when we step back and we think about memes specifically, and I don't want to spend too much time on this, but basically, most of the world, billions of people, basically spend an inordinate amount of their intellectual energy plugging their brains into unaligned AIs that are programming them with memes. TikTok, Instagram, YouTube Shorts, a lot of other things. So memes are already a pretty dramatic part of the global internet economy. Digital token memes are going to be another thing. I have concerns about kind of building economic incentives around memes. I think it could be very problematic, given how problematic misaligned AI in a social media context has become.
I just want to go back to a comment you made previous about government-issued digital money as well, and that we've had for years here at Davos discussions around central bank digital currencies, and I know there's a lot of research being done from various central banks, including the Federal Reserve in the US, into potentially a digital dollar of some sort as well. What do you think of the idea of CBDCs at this point in time, particularly where you've also got stablecoins, which are doing a very good job in digitalizing the dollar?
Look, I don't think there's any significant, serious CBDC work happening in the world today at scale. And there's certainly not, it's not happening in the United States. The United States and the US dollar is built on a two-tiered intermediated system where payment system innovation, technology innovation around money is entirely driven by the private sector in partnership with prudential supervision by central banks, other banking regulators. That's not going to change. And in fact, the number one way that a government can compete for money on the internet is unleashing the innovation of this technology specifically. The pace of technology progress, the obsolescence of technology in terms of these blockchains and all the things it makes possible is extraordinary. And so you want to tap that, just like the government didn't come in and say, we're going to build a whole government email system or a government internet system. France did that back in the day. That wasn't very successful. I think this is clearly a place where you need strong national regulation and unleash the private sector, non-banks, banks, fintechs, a lot of others to innovate here. So I really think just like SpaceX is leading the way in terms of private sector innovation in space, I think digital currency technologies from the private sector are going to lead the way for the dollar.
Fascinating. What are you most excited about in terms of innovation building on your own platform as well? What do you think are some of the key use cases we may see in the next 2-3 years coming out of things being built with USDC?
Well, I think a huge theme that we're excited about is the way in which stablecoins change how cross-border commerce and value exchange can work. And it's not just the efficiency of moving value inexpensively or fast. It's that we have a very globalized economic system. We have different parts of value being produced and exchanged and serviced and labored in all these different parts of the world. And there's a tremendous opportunity to coordinate all of that on-chain and to use programmable money and stablecoins and smart contracts to really reconceptualize how that entire world of cross-border economic coordination happens. And so we're already seeing that happening in a very bottoms-up way. And my own belief is that this can be a huge accelerant for the global economy and a huge liquidity enabler, in a sense, for the global economy. And that can open up capital, investment, and opportunities for access to capital for a huge marketplace. If we think about Alibaba, or we think about Amazon as global marketplaces that coordinate gazillions of end users and gazillions of creators and suppliers and so on, those marketplace platforms have really transformed commerce and actually the range of goods that we have access to today. I think the same thing can happen to capital markets. I think that access to capital and credit and all kinds of time value of money based constructs can be moved into internet scale marketplaces. And I think that could be dramatically larger than what banks are able to do today. And I think private credit is an example of that already. But I could imagine a very different scale of that, an internet scale of that, with the same efficiencies that we've had from all these other internet platforms and marketplaces, but coming for capital.
Fascinating. Jeremy, you've been coming to Davos a long time, and the promenade through Davos often gives us a sense of what's hot. There were years when it was very heavily populated by crypto companies, and this year everyone is obviously talking about AI. As you think about the intersection of artificial intelligence technology with blockchain Web3 technologies, what is that intersection? What does it look like for you?
I think it's huge, and I've written about this. I think there's one part which is sort of not about money, which is just about we need to be able to have provable inputs and outputs of AI. We need to have provable provenance of data and ownership, and so we need truth machines more than ever, and trust machines more than ever that are not centrally controlled by a government or a company. And so I actually think the fundamental of these blockchain operating systems are extraordinarily important in providing us these trust and truth machines for creating proofs around what AI is doing. So that's one really big category. The other is in the economic arena. The agentic economy is about to explode, in my opinion. I believe that the prevalence of digital workers, the prevalence of AI agents, we're going to see a pretty dramatic scaling up of that. And the existing financial system is simply not built for that. But this new internet financial system is. And the ability to conduct transactions at the speed of the internet at a fraction of a cent anywhere in the world, programmatically, provably, with cryptographic security, that only exists with stablecoins and blockchains. And so AI agents and stablecoin-based economic coordination, I think represents a tremendous convergence. And I think we'll see that play out over the next few years. And it may be that, I have this general concept that when moving information became free, and publishing content became free, and publishing software effectively became free, the net world output of those things, like million-x'd. When moving money becomes ubiquitous and free, the net world output of transactions will kind of million-x. And when agents scale out, the demand for those transactions will radically exceed anything we've ever seen before. And I think that's really made for using crypto technology.
Jeremy, I think there's a whole nother episode we need to do on this. That was a nice little tease, I think, but that's a nice place to stop. That's it for this episode. If you do want to contact us, email us at beyondthevalley@cnbc.com. Please follow and subscribe to the show, and you can leave us a review. Thank you, Jeremy.
Thank you, Arjun.
We will be back next week for another episode of Beyond the Valley. Goodbye.
Beyond the Valley.